Welcome. I'm Wim Vanhaverbeke from the University of Antwerp. I'm a professor of digital strategy, and I will talk today about digital technologies, business model innovation, and innovation ecosystem management. What are the implications for startups? Because I think startups have been working a lot on, let's say, their minimum valuable product. They have been working on POCs and so on. But the question is, of course, is this enough? Should we, in an era of digital technologies, should we probably change strategies for startups and for larger companies as well? Well, let me start with a quote of Thomas Malone. A few years ago, he said, some of the most important future innovations will not come from new technologies, but from new forms of collaboration. And so that's probably for startups quite a difference in mindset. And I think this is true. This will probably be the future for startups, that not only the technologies, but also the way they collaborate is something that is really, really important to make a successful strategy. So what are the implications for startups if somebody like Thomas Malone from MIT is saying this? Let me start with a kind of overview of what I'm going to say in the next 20 minutes. We all know the digital strategies, digital technologies, so we should not really focus on the technologies itself. You all know them. It's AR, VR, it's data, big data, it's machine vision, it's AI, IoT, so we know this kind of stuff. But digital technologies itself don't generate any value. It's the new business model that generates value, and usually these are the startups that are generating these new business models. So we see nowadays more and more joint value propositions with interdependent value creation between different startups and between large companies and small companies. And still, that is working very well too. So the technologies are moving on very quickly. The new business models are coming in. But finally, what we see is that the ecosystem management, which is also required, is slowing down the whole thing. So I'm going to talk about ecosystem-wide collaboration, co-innovators and adoption risk, and lack of ecosystem management, which is holding back startups to become successful. So if I can summarize, we're going to have, if you go from the left to the right, you're going to see some slower pace of change. Digital technology is going very fast. Innovation ecosystem management is going relatively slow. And so that's the bottleneck there. So we get higher barriers of change if we go from the left to the right. And it also becomes more important to create competitive advantage by having the right ecosystem management. So I'm going to focus in my whole talk about the identification of the barriers to change, which are usually linked to the ecosystem thinking, and then also how to eventually develop an effective ecosystem strategy. So this is like the structure of my presentation for the next 20 minutes. So what is an ecosystem management? And I don't want to focus too much on definitions, but let me give you one definition which is maybe crucial to understand what we are talking about today. If I take the definition of Ron Adner, he mentions that an ecosystem is an alignment structure of a multilateral set of partners that need to interact for a focal value proposition to materialize. Now, this is a lot of words in one single sentence, but let's analyze it. The first thing is that you're going to realize a focal value proposition for a customer, a type of customer, a set of customers. So that's not new for startups. Startups know very well how to create a value proposition for customers. But you have to be with different partners. It's not only you. It's not you delivering a product or a service to a single customer. You have to be together with other partners. You have to work together with partners, a multilateral set of partners. You have to interact in a specific way. And then the problem is that each has its own way of capturing value from this kind of collaboration, and so you have to align it. And the whole alignment between these different partners is something which is relatively new for most companies because they're not used to create value together for a customer. So that's what we're going to talk about. If you put it into a kind of figure, you probably know very well what is, let's say, a horizontal supply chain, right? So you have like you as a central startup has a connection with the final customer. Nobody is interacting with that. It's you and the customer, but you have a lot of suppliers that have to align with you. you know how to do that, that's fine. On the right side, you see a market structure, a market-based value system. That's easy. The customer can value your product independent of other products. So that's fine too, you understand that. But in the middle, we see something typically which is ecosystem-based value creation. And there you see that your product, if you're the focal firm in that picture, your product creates value, but it only creates value if other complementers are creating value too for the customer. And so that's something new for most startups. So the implication here is that your own product, your own service is not enough to create value for the customer. And so you have to align your value proposition with that of the other complementers. And that's something which is relatively new. So this is theory, and I'm sorry to bother you with theory. So let's go to practice. I think this is much more interesting for people like you to go to practice. So what does it mean in practice? Let's go to agriculture. Maybe not your field, but you will see that there are many parallels between agriculture, healthcare, where I'm working in, and then also other industries like fintech, right, or insurtech. You call it. Every industry has a similar impact, let's say, from digitalization. So I focus here in this case on precision agriculture, on pest control in precision agriculture. Digitalization is very much in agriculture as well. And so I focus on one case of Sarvio, which is launched by Bayer in 2017. In the meantime, it has been acquired by BASF. But Bayer there was concentrating all its digital farming solutions, and it has already been accepted by 250,000 users in 60 countries. So it's all about pest control. It's digitalized, so you only control the pest in areas where there are pests, right? And you use the digital, or let's say the smart technology, digital smart technology, to know where the pests are, how to spray it, and so on. The question is here, and the customer here is the farmer. The question is, will the farmer adopt this technology? And let's go back 50 years from now and see how it worked, let's say 50 years ago. Previously, you needed a pesticide, of course, you needed a spray machine, and the farmer would just spray on the field. So you need a guideline, you just have the pesticide, you have a machine, and you just move on the field. This was very simple, right? So it's just a transactional model. But today you have something like Photonics, which is a small startup, just probably like your startup, small startup in photonics. And what they do is they transmit infrared, of course, invisible light to detect the flying insects on the field. So it's on field, it's sensor data. And what they do with it is very simple. So they automatically collect the data. They do some machine learning. They integrate all this data into a digital platform, and finally they can do this precision spraying. So reducing, let's say, the number of spray, of the liters of spray you need, but it's also ecologically very friendly. So it's nice. It's increasing the productivity for the farmer, but at the same time it's ecologically friendly. So how does that relate now to our ecosystem thinking? Well, you have you still need pesticide, you still need spray machine, and you still need to spray you still need to spray on the field. So that is not changing, and you still have the same actors. So you have Sarvio, which is BASF. You have John Deere on the one hand, for instance, with the tractor, and you have still the farmer. But now it becomes more complex. You have Photonics with this data. It has to be integrated with geo and time data, and then everything is integrated into a farming data platform, which is here sold by BASF to the farmer. So the farmer can integrate data with the actual spraying. It leads to an improved spraying, so you have a lot of value creation there. So it's an interesting value proposition for the farmer. It looks pretty nice up till now. But then you will see that ecosystem thinking is also, if you don't manage it correctly, can also be a real problem for the farmers and also, let's say, for the other players in the game. If you have, for instance, the pharma photonics, so pharma photonics has a problem with Sarvio, can have a problem with Sarvio, for the very simple reason that they are doing a lot of field tests. These data are very valuable for a small company like Pharma Photonics, but the question is, can they use this data for other applications outside Sarvio? And there you see that the negotiations, or let's say the agreements between Sarvio and a small company like Pharma Photonics can be really troublesome. But also for the farmer. The farmer now has to get the data from Sarvio, but at the same time he needs a machine from John Deere. And John Deere has its own data platform, which is not compatible with that of Sarvio, which leads to a lot of problems for the farmer. So the farmer itself will not adopt this technology as long as John Deere and BASF are not having a compatible database. So we have some, so the yellow arrows show the tensions in that system. And so if you look at the advantages, a lot of advantages, potential advantages for the farmer, but at the other side there are quite some challenges, and challenges which are not related to the quality of the product you're making, because Phonaphotonics is doing an excellent job in technology and delivering value to Sarvio, but it's related to the ecosystem. And if the ecosystem is not working, Phonaphotonics will, as a startup, will not profit anyway. So what are the challenges here? So like I mentioned already, it's a lock-in for Phonaphotonics. The user of sensor technology outside, here I mentioned Bayer, but it should be BASF, beyond the spraying application is not allowed, and so Phonaphotonics does have a lot of problems there. Data ownership is an issue. What is Sarvio doing with the data of the farmer, right, on the field? These are data from the field. So what about the data ownership? What about the use of the data? What about the compatibility between the two databases of John Deere and Sarvio? So what about the lock-in for farmers? And I just summarizing this kind of challenges. If you don't solve it, the ecosystem will collapse. The ecosystem will never get launched, let's say, will never get any serious size. And therefore, you will see that even though that Phonaphotonics had a perfect solution, a perfect technical solution, this will never fly. And so my conclusion here is, like in many other cases I have been analyzing in healthcare, but also like in fintech and so on, or in automotive, you will see that the technology delivered by small firms is great. The value proposition is wonderful, but if the ecosystem is not managed the right way, you will not fly anyway. So let's move on. So can you do that in other industries? Sure, you can do it in any industry. I give you one of the health continuum. This is used by many large companies, and they show if you could integrate all the data between, for instance, healthy living, so your smartphone data or smartwatch data, if you could integrate it with the data from hospitals where you diagnose and treat people, if you could integrate these data then with, for instance, home care or outpatient care, yeah, that would be wonderful, and it would create a lot of value for society. But today, you see that this data are siloed, right? The typical hospitals have still their siloed data. Smartwatches are not connected to hospital data, and so on. So if we could do that, we could generate a lot of value for society. We would have less costs in healthcare. We would have real-time data. We would have an improved quality of healthcare. So a lot of advantages. And yet you see this is not working because, as I will show you later, there are very good reasons for particular people and particular organizations in this value chain not to get engaged in digital technologies. So you have to solve that problem before you can solve, let's say, the problems of the startups. Startups are hindered by ecosystem problems. So let's have a look at these digital platforms, right? They play a role, but they have different characteristics of what we usually think about digital platforms. So traditionally, we think that digital platforms are connecting two-sided markets. Think about Airbnb or Uber and so on. That's something we have as a prototype in our mind about digital platforms. They are transactional platforms, so they connect me with somebody else in Tinder, or me with somebody who has a room in Airbnb, or somebody who has a car in Uber. And so these transactions are very simple and very standardized, because a taxi ride in the United States is more or less the same as in Europe. So this is very much standardized. But here, if we look at what I have been showing you in the case of the agriculture, but also for instance in healthcare, if you have this kind of B2B platforms, that becomes more difficult. It's not a two-sided market, it's a multi-sided collaboration. Think like, for instance, in healthcare, you have to connect people with that are producing wearables. You have to connect people that produce apps. You have to connect them to providers, to insurers, to home care people, to regulators, to public policy makers, and so on. So it becomes much more difficult. The ecosystem around this platform becomes quite complex. But it's not only the complexity, it's also the way what comes out, it's also the value proposition that comes out. Think, for instance, In healthcare, it's not a standardization you're focusing on. You're basically focusing on a personalized service, because if you have the data if you would have the history of a patient, or DNA data of patients, and you combine this, then you may be sure that if I and you would go together to a hospital for the same disease, we would still be treated differently because my history is different and my DNA is different. So instead of having a standardized service, you're going to have a personalized service. So digital platforms do play a role in these ecosystems, but it's quite different of what you usually think. And also scaling is different. Think, for instance, we usually say, okay, scaling is very easy for digital platforms, and we take Uber again as an example because Uber has no cars, so it can scale very rapidly, which is, by the way, very true. But in our cases here, we see just the opposite. Scaling is very, very slow. And let me give you some reasons. Agriculture, for instance, is farm per farm. You have to convince farmer per farmer that he has to move into that direction. And I have already been showing you that it's very difficult to convince farmers if, for instance, John Deere and Xarvio are fighting about the complementarity and the connectivity between the data sets, right? So as long as there's a problem in the ecosystem, you will see that farmers will not pull in. Same for healthcare. If you want to connect hospitals, right? So you have to convince the hospital director, and for each hospital you have to do the same thing. So many of these new technologies, these digitalized technologies, are not introduced very quickly, just because it takes a lot of time to convince hospitals to change their IT systems. And even though that you may convince a medical doctor about a digital solution who may profit directly from such a solution, he is not making the decision himself. The investment is done by, let's say, the hospital direction. And so if the director is not the hospital hospital management is not agreeing with it and is not financing it, then even when the medical doctor is agreeing with you, you will not sell anything. Regulation can be very proactive, but what we see is that the current regulation and the fact that the old regulation is still in practice is preventing us from using digitalization in the right way. So this is another problem. And then finally, I think digital technologies only can generate some value if it has a transformational impact on the business process. And there you will see that people are resisting changes in business processes, and the question is how you have to solve it, and there is ecosystem management coming into place. I give you an example from my previous university, the University of Hasselt, where they have been focusing on hypertension monitoring among pregnant women. So about 6-7% of the pregnant women have hypertension, and the question is, can we use? It's a very simple technology. Can we use remote monitoring for these women, reducing cost, let's say, for healthcare organizers? It also brings a lot of convenience for the pregnant woman and so on. So let's have a look at this project. It could be a project of a startup, right? Because this is just a remote monitoring system. So it could be a product of a startup, but here it was a product of a university. So what was Primum as a project? It started in 2014. It took like 4 years. There were 5 Flemish hospitals involved. And basically it's a very simple thing. So they tried to reduce the problems with hypertension among pregnant women. And it was a telemonitoring project, which we all know now with the COVID problems. But at that time it was quite novel. The pregnant woman, what does it mean? The pregnant woman takes blood pressure every day, twice every day at home. The values are checked by a midwife in the hospital, and only if there are abnormal values, then the gynecologist will be connected, will be informed, and she will connect to the pregnant woman, who has then to come to the hospital and so on. So there's also a control group who works with the previous system or the previous processes, where pregnant women have to come several times a week just to measure the blood pressure and so on. So this is the technology. This is, let's say, the value proposition. But also, what are the results here? And then you see that, from a societal point of view, the results are phenomenal. You have fewer prenatal admissions at the hospital. There's less cases of hypertension. Newborns are average 10 days older, so less premature babies. We have fewer birth inductions, and there's a major cost reduction, like 2,000 euros less per delivery. So you would say, okay, given these results, we only have a positive impact on society, and so it should be introduced in all Flemish hospitals, or all hospitals in Belgium. Well, this is not the case yet, and the question is why. Well, if you now look at how the benefits are distributed, then you see that the patients, because a patient is very positive about this new technology. There are less complications, there are less risks for the mom. She is more comfortable because she can stay at home. The baby is older and so has less problems. There are less birth inductions, so everything is fine. The government should be happy because there are less costs, there are significant cost reductions, and there is less healthcare cost afterwards. But the problem is with the gynecologists and with the hospital directors, because gynecologists are losing income through telemonitoring, and hospital directors also want to have a neonatology department which is filled up with beds. And here you see that a number of visits at the hospital will be reduced. There are less casualties, and so less problems with pregnant women. And so they're going to have the hospitals will have lower revenues, lower income. So what you see here is that through the introduction of telemonitoring, you see that gynecologists and hospital directors are losing money. And if you want to, they will resist the solution, and they did resist the solution. And if you want to introduce it anyway, that means that you're going to have to solve the problem of how to remunerate gynecologists and hospitals. So it's an issue that cannot be solved by any startup, cannot be solved by any ICT company, but this is another partner in the ecosystem here, the insurance companies, or in the Belgium system, the government, that has to act in order to make sure that this can be introduced. So what are the implications for the process changes? Digital technologies tend to change the existing business model fundamentally. And requires changes in the way people work, in the way companies work, infrastructures may be changed, and so on. And so not everybody wins, because here, like we have seen, the gynecologists, in the case of hypertension, right, are losing money, and they will resist the whole change. So as long as we have this kind of resistance, we have to take care about people that may lose money or that may have risk involved in adopting this technology. So the pace of the digital technology is much larger than the change in the downstream partners in the value chain. And so the barriers are not technical, the barriers are really organizational. It's related to the workflows and the institutional context, and you have to solve that before you can solve, let's say, the introduction and the adoption of new technologies introduced by startups. How you have to overcome these hurdles? Well, basically that's the active ecosystem management coming into the picture. I will not go too much in detail here, because it's not, we should not go into ecosystem management. That's maybe for another time. But let me give you a few ideas there. First, if you look at the traditional ecosystem literature, they focus almost exclusively on what we call unipolar ecosystem management. What is it? Well, take the example of Amazon with Kindle. Amazon has been orchestrating that whole ecosystem on its own. The big problem was the publishers. The publishers didn't know how to make money on ebooks. Well, Amazon has been taking care of publishers by making sure that we could, for instance, as customers, we could not copy the books, we could not share it with our friends. So that was one way to make sure the publishers could make money on ebooks. But this kind of unipolar ecosystem management is not working. So I have been talking to companies like Philips and Siemens and IBM Watson Health, and they are platform providers, but they hit the wall when it comes to ecosystem building, because providers and insurance companies are not willing to join them on the platform. If you look at Bayer and BASF and John Deere in agriculture, they develop each their own platform, but then there's no compatibility, which leads to few advantages for the farmers. And so you hit the wall there too. There is also potential competition from digital giants. I didn't mention that here. And finally, you also see that there is a kind of demand-side orchestration popping up very slowly. But I think this is something we have to keep in mind. It's not the producers, it's not the startup, it's not the big companies that are orchestrating. It's the, let's say, the demand side. The farmers, for instance, in the Netherlands, patient organizations, energy associations, and so on. So you see that the demand side is organizing itself into platforms, which then will allow some companies to connect to that platform and on the conditions of the farmers, for instance, in the Netherlands. So what are the conclusions? Excuse me. So the first thing is our era is characterized by disruptive technologies. Quite a lot. I should not explain that to you. Startup managers do know that much better than I do. And they have the potential to transform all industries. I think that that should not be explained to startup companies. They see the benefits, they see the opportunities of introducing digital technologies in virtually all industries. So you have to take a proactive stance if you want to win. But changing your business model, that's where that's where the value is created. And here you see that you only can create value if you do it together with complementary, if you do it together with other partners in an ecosystem. So you have to work in an ecosystem. So what does that mean for startups? Startups have, of course, to develop their minimum viable product. They have to develop, let's say, their POCs. But at the same time, they have to choose the right ecosystem and their position in that ecosystem. Ecosystem based on voluntary agreements, so you can join it or not. That's up to you, but that's a strategic decision you have to make. And I have the impression that we focus 90%, 95% of our time to minimum viable product development, which is fine, but we should also choose the right ecosystem because that's going to determine how successful your company will be. So then once you are in an ecosystem, you have to try to leverage not only your own resources, but the resources of your ecosystem, the resources of your partners in the ecosystem, and the relationship between the partners. That's very crucial. But once you're in an ecosystem, then you also have to play according to the rules of an ecosystem. So not everything goes. So you're limited, right? So do you want it? Or you want it or you don't want it? And competition is no longer you against another startup. It's an ecosystem versus another ecosystem. It's not you versus another firm. So how to orchestrate such an ecosystem? I will not go too much in detail there, but I mentioned already, it's going to be a multipolar orchestration. That means that you have to make a coalition. Startups can be part of that, but usually it's more bigger partners like big companies, or let's say institutional partners that are organizing and orchestrating an ecosystem. But I know examples where startups are doing it themselves. But it's very important that you realize it's a coalition. It's not like you're gonna orchestrate the ecosystem. Companies try to monetize by owning data. That's another big problem. So we have seen many examples of that already. And while sharing and combining data leads to innovation and new services. So it's not owning, it's not your ownership of data that's going to lead to a new value proposition, but it's the sharing of the data. And just to make sure that we understand each other here, the sharing of the data means that you're going to have to combine different data sets. Think, for instance, about healthcare. Philips may have a data set, hospitals may have a data set about patients. And if you want to, for instance, to have like a stroke emergency center, which I'm now working with Siemens, for instance, you see that you need data from different partners of the value chain. So if you don't know how to exchange data and you don't have the rules to do that in a way that everybody agrees upon, you're never going to have a stroke center which is valuable for customers, which is valuable for patients. So where do we see new ecosystems popping up? Well, one recent development is in China, where you have Tencent, Alibaba, and Ping An, for instance. They build super ecosystems, including all healthcare actors. The question is, of course, do we want, for instance, a Google or an Apple driving our healthcare ecosystem? Probably not, right? So, but in China, this is the case right now. You also see that we need maybe some new policy measures, for instance, like in the EU for financial institutions, they have the Payment Service Directive number 2, and it says that banks and other other financial institutions that manage payment accounts for customers, they have to provide third-party services with access to those accounts, right? Of course, with consent of the owners. And so I think we also need this kind of stuff in agriculture. We need this kind of stuff in healthcare and so on. So there's a lot of work there on sharing data. And of course, that's not only something that we can do, that's not a startup can do, or even large companies can do. That's also policymakers have to be involved. Or should we go for a combination, for instance, of a data foundation, connected platforms that could be firm owned, and the users are data owners. So I see possibilities there in farming, in healthcare, in energy, and automotive, and I think that's something which has not been discussed, let's say, as a mainstream discussion. I didn't see that yet, but it will come pretty soon, I think. So public authorities, my last slide, public authorities also have to be involved. They have to understand ecosystem management, and so I don't see that yet, that public authorities are proactively working on ecosystem management. I see that innovation policy is still focused very much on individual startups and SME development, not on ecosystem integration of these startups, and that's a pity. They also should work or act proactively in shaping the financial, regulatory, and legal context of ecosystems, which governments, at least national governments, are not doing yet, or they just start doing that, and the EU is not really leading in this yet. We also should be knowledgeable about digital technology. They should be knowledgeable about digital technologies and their disruptive potential in healthcare, mobility, energy, education, but also other industries. And setting the right context for ecosystem development is probably the most valuable policy intervention for startups, if public authorities could do that. That's the end of the presentation. Thank you for your attention. I hope it gives you some insights to broaden, let's say, your view on and renew your view on how startups can, how we can help startups in developing their products and helping them to become successful. This is maybe a view which is not mainstream in startup development, in startup growth, but I think it's as important because digital technologies will be there in the next decade, and we will need ecosystem thinking to make sure that they are successful. Thank you for your attention.